The SA Corporate Real Estate Fund was previously known as Marriott Props and was acquired by Old Mutual. It owns retail, industrial and office properties, primarily in the major metropolitan centres. The company has a market cap of 7.7 billion rand and trades on a forward yield of about 8.2%. So we're looking at a slightly more diversified portfolio here than if you look at Emira's portfolio in that office environment.
Yeah, it's one of the companies that's had a lot of management changes. We mentioned last time on the show. They've effectively had about 4 CEOs in the last 5 years, but the new team that's on, Rory Mackey, who's running the fund now, seems like he's going to stay on and seems very committed to the long-term picture, and I think it's doing the right thing. So they've just renegotiated the management contract out of Old Mutual and given it to Broll. They're working right now to do a Manco buyout or internalization, which is the right thing. So it is going to be a few steps, and I think it's probably a long-term story. On asset level, great industrial portfolio, B and C grade retail, and a small portion of office, which is about 10% in the B and C grade space, B and A grade space.
I'm going to ask you, do you want to ask Kundai any questions, Paul?
No, but I mean, we're talking about Fourways being a B grade area. The B and C grade areas we're talking about here are in places like Pinetown, Pietermaritzburg, you know, those kinds of places.
Let's just offend some more people as we go along with the show.
I've always had a soft spot for this one because these guys bought a portfolio for R1 billion from a client of ours. So our client sold a bunch of properties called Buffcol to
it's
these
a warm,
guys.
fuzzy feeling you get with
Yes,
SA
no, that was a very good day
Nothing
for all
tangible
of us.
in
Because then
terms
all
of
of that money turned to cash. But look, the property, as Kundai says, lots of stuff going on. Old Mutual picked up the whole of Marriott. That's why this one kind of evolved. Gerard van Zyl, ex-Vukile, was there for a while. He's come and gone now. So I guess from just the kind of moving parts and changing dynamics and all of that, you'd have to say it's a bit of a wait and see with regard to the current valuations.
What about some corporate activity among the smaller players here?
We think that with the current movement or the spike in bond yields, there is probably going to be more consolidation within the small players. Capital did make a play for SA Corporate in 2012, but that didn't go anywhere after some failed negotiations. But we expect that on the small cap side, over the next few months, there could be a few bids.
Not worth buying on the back of potential corporate activity.
Yeah, what you find in the listed property space is that there are a lot of poison pills that you find in the Mancos. So you need to look at a lot of the detail behind the actual structure of the companies and the Mancos before you could make a play on that basis.
And that, of course, may have been the reason that we saw Growthpoint and Redefine with the trouble. Is that right, Kundai?
Fighting
the
over
issue that we had
Fountainhead, yeah.
The poison pills?
No, that wasn't
scenario.
that wasn't a poison pill issue, but it was more around the structure of a property unit trust, a PUT, and what that legally meant. So Growthpoint made a play for the assets. There was a big fight, but Growthpoint has gone away now.
Redefine out on top. Mark Wayner, we spoke to repeatedly on the show. Hot or not on SA Corp?
I'm going to go with not hot, just because there are lots of choices in this space, and this one's got a bit too much noise.
Not hot. Hot or not on SA Corp? Kundai?
You said it for me, not hot.